Good morning, everyone, and welcome to the Morning Market Report. I am Army Piper. My pronoun is King Bear, and we've got a decent morning. I mean, it's not horrible. We're holding some support levels on Bitcoin right now. Taking a look at that chart. Yeah, we're holding in the golden pocket, guys. We got another test down here on it. Let's see here. This would be yesterday morning, bounced up, got a perfect rejection there right behind my head off of that dynamic reactor again. And now we're just kind of trying to hold this area. We are getting a little bit of movement this morning in the markets, but be aware we do have Dow Jones, S&P, NASDAQ all right there above my head in the red. The VIX is green and it broke 40, guys. We talked about this VIX. I said I'm looking at it to hit 80. We'll see if it does. All of that and more, plus JP Morgan raising the chance of a recession in 2025 to 60%. We're going to break all this down. We're going to look at the markets, look at the charts, give you guys how I knew that the top was in. The signs were there, guys. The signs were there, and I will show you all of that. But let's go ahead and jump into all of this. You guys know what time it is. Class is in session. Good morning, everyone, and welcome to the Morning Market Report. I'm not going fishing today. I had to put my glasses on. I couldn't do anything with my contacts at all today. So there we go. We're wearing glasses today. I'm going fishing. Actually, I'm going on another cruise. I got 3 cruises between now and January 2026, plus a trip to Vegas, plus a trip to the Midwest. Going up to see some family. Yeah, lots of vacations. Let's go vacationing. But yeah. What's up, guys? Welcome to the show. I appreciate everyone being here. Alexandra G in the house. Eric Wallen in here with us. We got Harp. We got Roman Brave, Crypto Pollo, Cluck Cluck, Mother Effer. Usernames in here with us. Baba Yaz. We've got, who else? Ninja Glock in the house with us. And of course, I can't forget about Duality C way up there. Average Crypto Joe also joining us in. And Calvin Lamont saying I'm ugly. You know what, bro? I might be ugly, but I will always be a better marksman than you. You're going to have to deal with the facts. Let's go ahead and bring up that. Yeah, we're in a bear market, bro. We're going to go ahead and bring up OC guy, my co-host here. Let's bring him up here on with us. OC, what's up, dude?
Not much. Doing fantastic. I mean, it's a lot of heat right here in Mexico. I mean, we are, let me just check it out, somewhere around the 35, 38 degrees C, right? So I don't know.
Celsius.
How to that centigrades.
Celsius.
There we go. So yeah, it's pretty hot. Other than that, ready to start turning on all my ACs of the house. And yeah, ready to start seeing Bitcoin moving because it actually kind of like a fake out on me. I thought we were going a little lower, somewhere around 80K, 80, 50 or something like that. It means that it held the freaking trend line. Surprising, but still we're squeezing. So we'll have to see how that plays out along the week or the weekend. And well, weekend low volume might not be looking good for Bitcoin.
Yeah, but I will say this. And it was said here in the chat. Bitcoin is holding up better than NASDAQ right now. So, I'm just saying, Bitcoin's doing well, but it has still got a lot of selling pressure. We can't seem to break through key resistances. So let's go ahead and jump into that chart, OC, real fast here. I want to jump in on that, and then we'll come in and take a look at what we're seeing on some news here today. But let's go ahead and jump over into the chart. Bitcoin here, guys. As I was saying at the intro, we did reject nicely off of the dynamic reactor from Chart Prime. It's an algorithmic moving average that reads a whole lot of data, not just a moving average. We got a perfect rejection there off of that bad boy, and down we came. Then we got a little pull up this morning, trying to break that 618 at $83,047, and now we're getting a candle body pulling back down below it. I'm watching for us to come in and visit 78,000. You guys know my level that I'm watching on the higher time frames. It is going to be 63 to 67K, just so you guys know. I'm looking at is to come all the way down to this beautiful point of control that goes way back in the day, the Wayback Machine, back into here. So this is the level that I would watch, and you can see why I think that if I go back there, there we go. We just have this big volume gap here, guys. There's a huge volume gap. It goes really thin. We get a little tiny nipple, and it's just thin, right? So there's not a lot down there to keep us afloat. And so I do think the price is going to continue down as the stock market sell-off continues. We did just see retaliatory tariffs come into play from China already. That's instead of coming to the negotiating table and going, okay, what can we pull back for you to pull back? China decided to come in and throw their wiener on the table too, if you will. So now it's a measuring contest. So let's go get into the news, OC. Let's break all that down. And then we'll come back and have you take a look at Bitcoin. And then we'll talk about all the signs that I saw, actually the analysis that I did that told me it was time to get out in January and how I knew to sell everything off. So let's go jump into the news and then we'll come back and talk about that. Looking at the news here, guys, on Into the Cryptoverse. Currently, right now, we are currently sitting with a crypto market cap of 2. Let me refresh just to make sure that's right. I don't like to give you guys old data, and I don't refresh this like immediately. There we go, $2.665 trillion. The trend median on this is at $3.663 trillion, undervaluation of 27.4% right now on the crypto market cap. Current risk level sitting at 48.7%. So we're at about a 50% risk band there. And then looking at the Bitcoin dominance, we're at 61.78% with stables, 67.59% without stables. I do think we're going to see this hit 71%. Just give it time. Give it time. And then we also, we had unemployment data come in this morning too. We'll talk about that in a second. Let's go look at the fear and greed index though. Fear and greed index currently for us is sitting at 28. We have a fear and greed of 28. We're sitting in fear right now. Let's go check out the crypto bubbles, see how they're looking. Nice little flood there of green bubbles coming in today. Bitcoin is up 1.1% on the daily right now. It is sitting at $83,000 on the dot. Ethereum is at up 1%. It's at $17.93. Big movers. XRP is at 5.2 today to $2.10. 1% on the BNB. I want to talk about price retracements to the upside also, guys. So we're going to take a look at that. You guys should know that I went back and looked at the S&P historically through recessionary periods and just to see what that looks like. Does it give anyone an opportunity to maybe take some profit off the table later? I'll show you guys all that in a bit. 1.4% to the upside on Solana at $115. Doge is up 5.1. Cardano's up 2.9. Tron's up 3.7. Not bad at all. But this is also, if we take a look, I mean, I know it looks good here. Seeing what we're seeing. But if you go and you take a look at what we're actually watching here, guys, on the weekly, we've got downside still. So 4.2% to the downside still on the weeklies, despite a 4.9% retracement. So when you look at the weekly, a lot of things still down. Tron's still up for the weekly. Mantra, OM, is still up for the weekly. So overall, we're getting a little bounce, but it is not returning greater than what we are down on the weekly. So we're still just at this point a lower high, I should say. Let's check out the Dow Jones, the S&P, the Nasdaq, Russell 2K, and the VIX. We are down 2.67% on the Dow Jones. S&P is down 3.29%. The Nasdaq is down 3.52%, 582 points. Good Lord. The Russell 2K down after a major correction level yesterday, by the way, guys, down 4.21%. That VIX is at 37.14. We were above 40 this morning. I do think that this is going to hit 80, and 80 would be a very ugly thing for the markets. Let's go look at the bonds, because this is what I told you guys. I thought the idea was in order to, create massive sell pressure, to scare the markets, to do all these things, was ultimately to bring down this 10-year treasury yield so that they can refinance that federal debt of $9.2 trillion at a lower rate, because the last time it was financed, we were at Fed rate of 0. Big old goose egg. And so now they got to bring this down. And I think that is the entire purpose behind all of this. If you guys do not know, I've talked about it on the show many times. Seeing this push down is a good thing. Let's look at gold. It's down today under the $3,100 mark, down 1.34%. Give it a little refresh. We'll have OC bring that up here in a bit and take a look at that. Economic calendar, guys. We got this data that came in this morning. Non-farm payrolls. Told you guys Friday morning was going to be a big one. Let's go break this down. Non-farm payrolls was at 117,000. Well, actually, correct that. We were at 151,000. They took away 49,000 jobs, 44,000. Let's see here. 50 to 20, that would be 30, 34, 35, about 34,000 jobs there. 44,000 jobs. There you go. 44,000 jobs were taken off the table that they said was there last month. Not actually there, revising that down to 117K. Consensus was that would be 135,000. Forecast to be 100,000. That would have been a much weaker labor market. Came in at 228,000. So a lot of people getting jobs right now. However, it does not break down if it's part-time jobs or if it's people that, starting to work. We do see that the participation rate has come up, which means that there are people trying to get jobs now that weren't before, and they're taking on jobs. So that means that a lot of people are probably worried and taking like, hey, honey, can you take a part-time job? Or, hey, I'm going to pick up a part-time job myself. So on and so forth on top of my full-time. And so we are seeing an increase there. But let's go break down some other stuff. The unemployment rate itself is up. It went up by 0.1%. I thought it was going to come in at 4.2. It's what I said yesterday. And here we are at 4.2%. Here's another one that's concerning. For average hourly earnings month over month, we came up 0.1%. You can see that we did get a revision to 0.3. So it was at 0.3, expected to be 0.3, came in at 0.3, but they actually revised this down. So it shows a little increase. But look at the average hourly earnings year over year. 3.8%. This means that people are making less now than what they were making 1 year ago. So we are seeing wage earnings start to drop. For those that don't know, this is one of the inflationary, recessionary, I should say, red flags. You should look for decreasing wage rates. And so we are seeing that on rising unemployment. So we are starting to see other flags that I've said have been missing from us being in a recession, the labor market and the wages. We're starting to see that come into play now. And I bet you if they break down this non-farm payrolls, this is mostly people taking on second and third jobs. If you look at the household survey, which I'll have that in a couple of days, we'll talk about it on Monday. I bet you that the household survey is going to show that it was a lot of people picking up extra jobs. Looking here also, the participation rate, as we discussed already, was at 62.4%. It's actually rising, meaning more people are trying to get jobs right now, probably on the fear of a recession and not knowing if their household is going to have the same income that it currently has coming down the road. We do have Fed Chair Powell speaking here in about hour and 10 minutes. So be aware the volatility may come from that. Could be a big nothing burger, but empty taco, but we'll see. And then next week, guys, we're going to get a core inflation rate coming in, expected to be higher inflation. Looking at the inflation rate month over month, expected to be a little bit lower or neutral, and then a drop on inflation rate year over year. So we'll have to see on that. And then PPI is expected to be lower or higher. Flip a coin on it. So that is what we're seeing there. Michigan consumer sentiment expected to be even lower, though. And you guys know that Michigan consumer sentiment does play a lot of impact on the markets, too. Let's jump over here into X marks the spot. So yeah, there's the breakdown. We continue to see rising unemployment rates in America. Number was revised down from 140 to 116. We talked about that too. Historically, been a great time to buy, probably worth the waiting a bit though. If you guys don't know, we talked about the VIX. Let's go take a look at what the VIX is telling us. Sorry if I just blinded everyone. Historically, buying peak fear has paid off. Forward returns have been very strong. When buying the VIX, buying when the VIX spikes above 35 leads to a median return on average of 14.9% after 1 year, 25.9% after 2 years, which breaks down to about 12.2% annualized, and then 34.2% after 3 years. When the VIX spikes above 45, it's been even better with the median return of 18.7% after 1 year. So you can see when that VIX is high, that has been advantageous and profitable for people to buy and how much they have actually made. So, but as they're saying there, probably worth waiting a bit. I do believe that the VIX is going to hit 80. And guys, if it's at that rate at 45, you can imagine what it's going to look like when we get to the level of 80, right? What else was there in here? Oh, yeah. If you guys don't know about this, California to ask countries to exempt it from retaliatory tariffs in the U.S. I want to talk about this for a second. Let's jump over here. So if you guys don't know, California, they've got like the fourth largest GDP in the world as a state of the United States. Their GDP is massive. They have high prices though. And a lot of people blame it on, regulation, politicians, so on and so forth. And that is partially part of it. But one of the big reasons one of the big reasons that California's prices are so high is because they're isolated. They have an ocean on one side. They're a very long country on the West Coast. And then on the other side, they've got the entire Rocky Mountains, which minimizes the avenues of approach for goods, the logistics lines going into California. So they're really isolated geographically from the main support lines for everything. And so they kind of are self-sustained over there. A lot of their goods do not come across the country via train and semis. A lot of their goods that they consume in the state itself is because it comes from ships. So, yeah, they are asking to be exempted from the retaliatory tariffs because they have a very unique import requirement for their consumption there. And that is just how it is. So, let me go over here. I got to see. There we go. Perfect. But yeah, so that was interesting to see that there. OC, your thoughts on that? You got some isolated areas down there too. You live in the Yucatan Peninsula of Mexico, and while yes, it is connected to the country, sometimes it's easier for you guys to get goods from ship than it is on land from your, because of how isolated and hooked up you are from the rest of the country. Do you think that California should be able to get some type of exemption, or are they just going to be, nope, you're part of the United States, enjoy? What are your thoughts on that?
All right, so I think they should be getting an exemption. I mean, in fact, long before ago, I do remember that Quintana Roo and Yucatan Peninsula, it was exempted of taxes, and that was exactly because of that. Not only because we were isolated and surrounded by water, there's what was only one way to get here, which was all across the country, back down and then up a little bit, so which increased the prices. But also we were giving a lot of to the federation incoming taxes, and that's because we are a touristic zone. I think California does give a lot to the main state, to the main federation, right? And based on that, I would say that they should. We're not longer a free tax zone, but I think that has to do more with the politicians, let's call it. But yeah, absolutely. I think California life has been going on on a rush when we're talking about prices. And in many cases, it's been hurting them, right? So absolutely, I think they would. But there's also comes in place like who's the favorite child of the federation, right? And if we give it to California, who else we will need to give it to, right? I mean, when we're talking about, yeah, they do bring a lot of tourism, but then what about the farming states, right? I mean, farming states are also important. I mean, they sustain the actual living food supplies of America. So why wouldn't they
California,
get it,
but
right? So I think we
California
start getting,
produces a lot of our produce goods too. California is a very
yeah,
important state.
true.
As much as
What
I
do you get
dislike
from California?
California, what's that?
I get my peaches from what?
We get peaches from
Justin
Georgia.
Bieber.
Georgian
Yeah,
peaches.
and then yep.
Midwest watermelon. Idaho
All right.
potatoes. Just saying.
Absolutely. So yeah, that's what I think. It's gonna be difficult because if you treat one state, we will have to treat another one, and every single state has its own valid reasons, right? Nonetheless, I do believe they should be having some sort of a relief path.
Yeah, we'll see how it plays out for them. I'm sure they're going to try to finagle something out of the federal government for look what you cost us. I'm sure that's how they play. And then of course it's all Orange Man's faults according to most of the California politicians. So let's go jump over here. Let's take a look at what else I got here for news. OC, I want to talk about the World War III of trade wars has begun, and then we'll get into that chart. The World War III of trade wars has begun. Americans are waking up to the first major tariff retaliation against President Trump. China has announced 34% tariff on all U.S. goods, with the S&P's 500 two-day loss now at $3.5 trillion. Matter of fact, guys, yesterday, the S&P had its worst loss since June 2020. I won't pull it up. I'll just tell you. June 2020, middle of the COVID lockdown, this was the worst loss that we've had since then. And so here's what just happened. This was a move that we all knew was coming, but wanted to pretend it wasn't. I talked about this yesterday. I was like, guys, I still don't think it's done because we're still going to have retaliatory tariffs on retaliatory tariffs on retaliatory tariffs. China has announced that all U.S. imports will be subject to that 34% tariff, and they added 11 American companies to their list of unreliable entities, 16 to their export control list. Separately, China's Ministry of Commerce said it was adding 11 American companies. Not sure which ones they are, but they are all dealing with rare earth elements is what I'm hearing. So new rare earth metal controls, they're imposing export controls on samarium, gadolinium, terbium, dysprosium, lutetium, scandium, yttrium, I guess, as President Trump has made clear, he wants more U.S. access to rare earth metals. So that was personal. And then this morning, oil prices are down. We are seeing oil prices drop hard right now. Another 6% is a clear sign a recession is coming. So let's go and talk about that real fast because JP Morgan has raised their recession odds for this year to 60% now. Let me know, guys. Let me know in the chat. I don't have a poll up, but put a 1 in the chat if you think we do have a recession this year. Put a 2 in the chat if you think it comes next year. Put a 3 in the chat if you think we're not going to have one at all. So 1, 2, 3. 1 this year, 2, 2026, 3, nah, fam. Let me know in the chat what you guys think about that. Tariffs announced this week by President Donald Trump has... What's that?
I will put it at 0. I think we started last year. And we've just been finagling our way out from it.
So, OC, I hear this all the time. I'm going to have to tell you a factor that exists in a recession, definitive factor, is unemployment and wage drops. We had not had that yet. And that is a definitive facet of a recession. I think that we've had recessionary red flags. I don't think we've actually had a recession because we did not have weakening labor. So I gotta clarify that one. That one gets missed all the time because it feels like a recession. And yes, you had recessionary facets, but what is really takes place in a recession, every single recession, is weakening labor market. So I had to break that down for you. Do I think that we have been washing up? Have we seen the tide of recession flushing in? Yeah, absolutely. Have we been straight up in the recession? No, we felt the blowing wind and rain. We didn't get hit by the storm yet. So, yeah, there we go. Let's go back over here. Biden redefined it. But the 2 negative GDPs do not equate recession by themselves. They indicate that we are recessionary, but you have other facets that take place during a recession that we never had. We're now starting to see those. So I know, trust me, they changed 2 negative GDPs, 2 quarters of negative GDP to not mean a recession, but we did not get the other recessionary things. So these policies, if sustained, would likely push the U.S. and possibly global economy into recession this year. Head of Global Economic Research said on Thursday, the economists put the odds of a recession this year is now at 60%, up from the 40% before the tariff rollout. So there we go. That is what they're looking at now. We can go now and start looking at these charts because I want to talk about long before we had tariff talks. Piper was a bear. He was a bear, and he came out and he said, guys, Q1, I'm out. I'm out of the market in Q1. I had 2 indicators that I showed that said I'm going to leave these markets. Long before Trump ever said the tariff word, I told you guys this. And so I want to go over and talk about those charts and why I made the call that I made. Sold it right after we broke 103,000. I was at 102.7 WBTC, and I sold. So it wasn't because of what I've seen with the with tariffs. It wasn't because I said, hey, Orange Man's going to crash everything. It was because I saw other indications. I saw the recessionary indications. That was the whole thing that I talked about last summer on this, of all the reasons that we were heading for a recession. And then also getting into what we're seeing on the charts, I did some cross analysis. And so here's the problem. A lot of people we'll go back here. Let's talk for a second here. A lot of people look at the 4-year cycle. They go, okay, 11 months after having, or 3 years and 11 months after the previous peak is when we peak again, so on and so forth. They got stuck on the 4-year cycle. And it is the equivalent, in my opinion, of people saying, you know what? I'm watching the jump rope here. I'm seeing the double Dutch bus going on here. I am timing it 1, 2, 3. I know how to jump in. I've already seen it, right? I know the pattern. This is it. And that is the extent of what their assessment was on the cycle. It is way more complex than a 3-cycle pattern. Way more complex. And there were plenty of other patterns to take a look at. And I'm going to go ahead and drop in here and show you what those patterns were. One was this. And this was what's on the thumbnail today, guys. If you go in and you take a look at the cycle peak, previous cycle peaks, okay? And I talked about this last summer, guys. This is an old chart. All I had to do was go open it up on here and look at when we break it. And take that average and look at it. That's 278 days from the time that we break previous cycle peak to our peak. Look at the next one here. I looked at that, 287 days. Okay, from the time that we broke our previous peak, we broke it there and then pulled back, still a break. That was 287 days. Okay, if we go in and we look at this cycle peak here, look at when we broke it, that led us to 343 days. If we take the average of 287, 278, and 348, or 343, I mean, we come in with an average here of 301 days, guys, from the time that we break the cycle peak. And that is why I said on Q1, I would be getting out of the market based on 4-year cycles that no one else was talking about, okay? The other reason is because if we go in here and we look at this chart, I want to get all of this in. Come on. Get in there. There we go. Is because of this right here. And this is going to be, I want to get rid of fixed range, and the rectangle. There we go. Is because of this here. If we go in and we take a look at every single cycle, pulling the trend-based fibs, you guys should know this one. It has also not just given us the time, how much time until the top, it also gives us the level of price action to the top. And so if you pull trend-based fibs, just like I did on this one here, this one pulled from bottom to top to bottom, okay? And that gives you a trend-based fib. That is a trend-based fib extension. You can find it right here. Trend-based fib extensions, okay? That gives you tops. We've hit it perfectly in cycle 1. Same thing here. Cycle 2, we bring a little breakout above it, but it is coming with the low to the high to the low of the cycle, okay? And if we take a look at that, we broke a little bit above it, but that was pretty much in the range. Next cycle going into 2021, looking at that, we have the top. We just came in right underneath it. That was our top. We hit it, guys. And when we hit it and we look at the time cycles here, again, top breaks. There you go. Look, it lined up. Time, and price all confluenced in the first quarter of this year. And that is how I knew to get out of the markets, guys. It was complex. It was multi-sliced analytics, but it was more accurate than the simplicity of saying, I've watched the pattern of double Dutch bus and I know how to get into the jump rope now. If you're following simple analytics and you're not digging further and looking at different spectrums, if you're not going, okay, I looked at it from this angle, let me look at it from this angle, and this angle, and this angle to find confluence for your analytical process, you're not really doing analytics, you're doing double Dutch bus. You can't drive on a road, as I've said many times, 3 times and go, I know exactly how fast this car can stop, and you've never driven on a wet road, then you don't know anything about that car. All you know is 3 times on one scenario, and nobody was looking at this from the different angles. That's how I knew to get out. So there you go. A lot of people was like, Piper, how did you know? It was. I would say it's easy, but it wasn't easy. It was cross-leveled analytics. So there you go. OC, let's kick it over to you. That is the level I'm watching. By the way, for those who are wondering, what do I think the bottom comes in at? I think ultimately it's going to come in at $36,900. And I've got a video coming out soon that is going to be on how to spot the bottoms with a single indicator. We've got one of the most powerful indicators in the market that will tell you when to buy. And I'm going to be doing a video on that soon, so be watching out for that indicator. But OC, let's kick it over to you. Let's see what you're seeing on the charts right now. But I definitely want to talk about the S&P and its potential for, hey, I missed out on selling the top. Do I have another chance coming? We'll take a look at that here in a minute. Let's kick it over to you there, OC.
Absolutely. Just take a look at 4 hours chunky candles right here. So basically, where I was expecting for a breakout based on that candle, right? This one, right? And I was expecting to jump back in somewhere around this candle. Although as the time passed, we had an indecision candle and a new bullish candle here. So we went to dynamic reactor and pretty much we rejected from it without hesitation. Right now, we're creating another indecision candle. So at this point, we're just riding the trend line. Let me zoom out a little bit so we know exactly where we are located. Let me also hide this. And we're creating, a pattern in here, right? This pattern kind of looks like a Wyckoff pattern, a little bit different because of this kind of volatility. But then let me show you what we've been talking about for a long time. The light at the end of the tunnel. Let me see if this will load. Perfect, there it is. So let's go back to daily very quickly. And this is the copy and paste candles from 2021 cycle. So what will the light at the end of the tunnel be? Well, it will be something happening in the market that will push the price of Bitcoin above the zero line. Let me show you here. Let me just grab this coordinates and do 0. There we go. Push the price of Bitcoin above the zero line here on the oscillator, making a big breakout. Going back for the retest, I'm looking at areas around 78,800 for that retest, and finally start taking previous highs. When will we know this? Well, when we break structure. When do we break structure? Well, when we start making the next peak in here, and then we break retest and off we go. Or for confirmation, so seeing this pattern here, breakout, retest, and then off we go. I believe right here, and this is what I have this interrogation signal signs in there. It is because I believe that we're going to be having an extended cycle, and we're going to be having this dead cat bounce movement. Differently from previous cycle, I don't know if we're going to make it above it like we did before, but we will need to have and come back here to revise this area before continuing. So I do see this. Look at how they draw back down to that area 78 ish area, and on the 4 hours, well, then we just need to keep trading at this point in the range or the trend line that we've been talking about for a long time. As you remember, we draw this range in here on the 4 hour, and we're been having very clear signals where to enter, right? We buy the bottom, right, and we sell the top. At this point, we are in the inner range. The only sell the top that we have had recently was a couple of days ago, right here. And we could be going in for a sweep of the lows for buy the bottom with a flip of the ribbon in here, right? And then continuing with this movement. Guys, if you're trading this range, you will gonna get stopped out. And that's part of our ranging scenario. Why? Because as we buy the bottoms and we sell the tops, we keep them open, and we just rinse and repeat, and we keep them both open in case it breaks up for some reason. Well, then our long that we open up here is going to keep making money, and we of course want our short that we open up there to get stopped out at in profit. How do we know that it's in profit? Because we already have taken 50% out, add 50% and take 50% out, add 50% and take 50% out, so on and so forth, right? I don't think that it's going to last that long. I think that we could be reaching at the end of this little range, and then we will be moving towards whatever direction. I believe it's going to be a dip somewhere around, as I mentioned, 76, 73 for that change of pattern, something like that, and then a continuation breakout retest with that breakout pattern that we talked about on this chart. So that one that I circled, let's give it a second. will be this one right there. So that's what I got in the 4 hours. Let me pass it over to you, Piper, unless you want me to take a look at the SPX.
No, I'm going to do that. I actually want to talk about recessions and the possibility for people to, if they wanted to take some profits off the table, don't do it when we're in a massive sell-off. I will say that the time to have done that would have been when Piper was telling you back in December, early January, I sold everything. But you may get an opportunity to take some profits off the table coming up, and I want to show you guys why on that. But first, I want to show you this the stock market fear and greed index just came in. Are you ready for this one, OC? Are you ready for this one?
Let's take a look at it.
Good Lord.
Those numbers up. Those are rookie numbers in this racket.
Fear and greed index right now on the stock market, guys, just came in at 6. So when you look at what ours is on Bitcoin, it's 28 right now, 28. Evidently, stock market is not used to these pullbacks the way that we are in the crypto world, because we're like, oh no, it fell. And they're like, I want to jump out a window and unalive myself. It's 6. Yeah, this is how they are taking this pullback in the markets. And then also, guys, retail got trapped yesterday. Kabisi letter, as we clearly noted in the post below. Yesterday's sell-off was not capitulation. Guys, I don't think we're going to see capitulation until the VIX hits 80. Honestly, I keep saying that. I said this last week, and now we're breaking 40. Yesterday, retail investors bought $4.7 billion worth of stocks yesterday alone, 10-year plus high. No one's bought that much stocks in over 10 years. Get back over there. Thank you. Today, retail capital has been trapped and institutional capital is taking advantage of it. Bear markets are when profitable traders can shine. Retail investors yesterday buying $4.7 billion in stocks yesterday. Good Lord. All right, guys, looking at the S&P, you can see we got a big candle here on the weekly. We're dropping down, not getting much bounce there at all. We do have a level of support here on the S&P at about 5,100 points. So watch that level, but I think we're going to push right on through that. Why? Because the VIX is telling us so. But I have recessions on here. And I want to show you guys some of these recessionary bounces that we've had historically on the S&P, because we can't really go back and do this with Bitcoin or crypto. Why? It's never existed in this type of economy. This is what I've been saying for a year. Bitcoin has never existed in a contracting economy. You don't know how it's going to react to that environment, right? Well, we can look at the S&P and try to get that and see what bounces. I'm not going to use this one here because this is the COVID-19 crash. This was a black swan event and very quickly recovered on a V-shaped recovery. Let's go back and look at prolonged periods here of recessionary environments, all right? And that would be the first one that we had back late 2007 going into 2008. And we take a look here. You guys can see we had a peak here. It started on the date here around 3 December of 2007. If we go and we measure from top to bottom there, that was a drop of about 17.5% on the S&P. But check this out, guys. We had a bounce here of about 14%. And if you measure from where that bounce was at from the peak up there that we lost to that was only about a 5% difference, okay? So we have this period, if you look historically, where we come in for a lower high. That is where you want to look at taking those profits off the tables. And right now, we're not getting that yet. We're still on this initial dump. I do think that we would come back into somewhere around 5,800 points on the S&P, which would equate to another bounce on crypto, right? Risk on sentiment. Hey, we're capitulating. Let's jump in. It's not yet. If we go back and we look at previous sessions here, look, we had our peak, right? We started to sell off, went into recession. I think we'll actually look a lot like this because we're selling off going into the pending recession call, right? But still, you had this period. This would be like December's top in Bitcoin for us. You have this period here where we fell from that peak to trough about 21% on the S&P. But if we go and we measure the bounce on that capitulation, that was a return of about 21% and only from that top level, about 5% from its previous high, right? Now, keep in mind, Bitcoin's almost double of what the S&P movements are on a norm. And so if we're talking like a 20% return, it could be like a 40% return, whatever, right? Depending on how far down we go. I just want to give that as an example. But, we had that chance there. We go back here. This one did not give us a chance. This is going back into 1990. We did not get a chance. It went down. It went into capitulation where it was sideways for over a month in this range. That would have been your indicator there. And then we go up from that. Matter of fact, I want to throw something on here just to see. Let's go in and throw on. I want to throw on the Chart Prime Oscillator Pro. Let's just go over here. I'm going to grab this. Let's go see, man. Let's go see. Copy. Put this on there. Paste. Paste. There we go. And then let's put this on the MVP oscillator because I'm betting you that this thing fired off there. Inputs, MVP, oscillator, foreshadowing, video coming soon to a Chart Prime or YouTube channel near you. Let's go see what this looked like. Yeah, look, capitulation. It's the bottom, guys. The amazing oscillator. I'm just going to put it out there. And so you would have had that whole period to get in before the climb. Okay, let's go back and keep looking here. There we go. Another one. Yep, it wasn't as good. We actually went into the recession, came back in, had a big spike up to a liquidity sweep, and then had another one here. So you can see that you don't want to sell when you're in the vertical range down, right? You want to wait for that bounce back up if you're looking on when to take your profits. So guys, just be aware that's what's happening historically with the S&P during recessions. We should see something very similar to that with Bitcoin. So if you guys are sitting around wondering, okay, I missed the top, how do I get another opportunity? Where do I take my profits? Patience. Patience, that's the answer. So you might get that opportunity. It's not a guarantee. Nothing's a guarantee in this market. It's crazy. It's risk. It's a risk market, right? So I do want to tell you guys that, look for those areas. Get your Chart Prime indicators. Throw that MVP on a weekly. When you start to see green candles pop up, might be a decent indicator that, hey, capitulation is occurring here, and this might be give us a bounce, not meaning that it's done. You might come back to go lower, but at that point you should be able to get a bounce. So that is the MVP oscillator, part of the Oscillator Pro Plus series, and you can get it linked down below in the description and a link right there in the chat. It was just dropped by Alexandra G, 45% off your first month. So amazing indicator. But OC, that's the S&P. Let's go take a look at what else you're seeing. There was a couple of things that was there. Take a look at Philip Morris. If you want to take a look at something, go look at Philip Morris. This is pretty fun. If you guys don't know who Philip Morris is, they're a cigarette maker, right? And so I want you to pull that one up, if you will. That ticker on Philip Morris, by the way, OC is, let me find it here. Philip Morris stock looks like it is PM. That is the ticker on stocks. So let me throw this here real fast to everybody. Philip Morris up yesterday, 4%. Nope, that's the VIX. Where's the Philip Morris one? Right there. Philip Morris was up 4.5% yesterday, right? And when you consider that the market was in a massive sell-off, this was probably a majority of your retail traders there yesterday and your investors, and it's no wonder that Philip Morris was up. Let's go take a look at that chart, OC.
So, well, seems like they don't only smoke them all, but they already have also cancer out of them. So pump and dump, guys. But other than that, this is an impressive candle. I mean, look at the areas that we were hitting. We did grow, I would say, that even a little bit more from the base of the candle to the top of the candle. That was like 4.8. And we're basically giving it all back. I mean, we're on the way down in here. We do have a goose head where we are supposed to be having it, but this engulfing candle to the downside is not talking that good about now this stock. If you guys are wondering if you should be jumping in, I would say to hold your horses until we start seeing some more clarity here. So yeah, this goose head usually is a retracement before a further movement upward and then a continuation downwards. So do expect maybe that push to the upside, but I would say that farther lower here, maybe even teasing with the dynamic reactor. But other than that, pretty impressive candle right here compared to the previous price action that we have had. And well, since this is the 4-hour, look at this. I mean, this is a 13% movement in here from this single candle. So Philip Morris seems like it's just been feeding off the fear every single time. I mean, I would like to time it with every single feeling greed bump that we have had. But look at that, bumps very hard, ranges bumps very hard, kind of like ranges bumps very hard, ranges. So maybe we can catch some of those movements in the future. But at this point, we just need to look for that cool off. But that's very funny, Piper, that you just see that kind of movement just pushing as we fail in the markets. So
Hey,
yeah,
people drink and people smoke when things are going to shit. I'm just saying, man.
holy shit, I've never heard about Phillies more. What kind of cigarettes do they do? Do they make?
Philip Morris, I believe that's Marlboro. I believe.
Oh, I see. Oh well,
Someone
yeah,
let me know in
I've had
chat.
those.
Is Philip Morris Marlboro? What else you got, OC? You got any
All
altcoin
right, so
love for
let's
us?
go.
I mean, obviously we're going down, but is there any short trades you got?
Let's take a look at the basics here before we start moving around. Let me go all the way up here. And then also I want to take a look at Jasmine or something like that. Let's go to FETH at this point. FETH, we had two options. Of course, they're not both in here. I had to remove one before overlapping the next one. But there we go. We bounced out of the dynamic reactor. The next thing that we were expecting, it was holding its position. We did not hold. We went through, right? So what we do is basically breakout. We're waiting for the retest. If we don't have the retest, and look at that, we're turning back around, I would say that a good opportunity will be on the way up right here for then a bounce to the downside. So this will be my possible entry right here. Let me bring on my indicators to see where do I have my support and resistances. There we go. I have a support and resistance right there, basically a resistance, right? So I'm going to be aiming for this area right here rather than this other one lower. And I'm going to be trying to catch that short. This long position is gone, of course. The short position is kind of like a playing out, but we didn't have any clear entries, so we did not took it. And right now, we could be waiting for this short position. Let's go and just make it happen here. Short right here. I do have a stop loss area. I'm going to be going for half of it. I don't really want to take too much of my money right now. And then I'm going to be aiming for my next target down below. I don't see any target down below, so therefore I'm going to be using my predictive ranges. Let me just give it a second. There we go. And well, it seems like it's all the way down there. Let me see if I can fix this because it seems like I'm having a little bit trouble with this other one. Let me just click OK. There we go. Let it load. And it seems like you already have load. Where are my other predictive ranges? Let me just see. Maybe they're just not printing. Lately, I've been having a little bit of internet issues. Let me see. I want to plot my predictive ranges. If they're not here, I just make them visible. Predictive ranges, chart 50. Let's go for field so maybe I can see them. Oh, there they are. All right, so it seems like, yeah, we could be going all the way down there. And look at that, we don't only have predictive ranges here. It just was a matter of loading the screen. We also are within a highly, highly bearish, loud order block. So I don't expect us to be breaking any new all-time high soon. So be prepared for that rejection zone. And guess where is our trend line pushing? Also, it is on a high volume, high disparity on volume area. So everything is pointing that if we reach this area, well, that will be a fantastic area for shorting Ethereum. So it doesn't disappoint, by the way. Litecoin. Litecoin not looking good at all, but something that it's playing out at this point, it is a downwards movement. Yeah, we have a highly bearish order block. I will say that exactly the same analysis is going to go for Litecoin. If you want to try to short it, wait for this trend line to be in the way. And of course, as long as we do have this order block, you are clear to get a shorty here. You need to be a little bit careful with Litecoin at this point. Why? Because of my zero lining here. We're trading to break through. In breaking through here and being above means breaking the trend line here and maybe going for a retest, which then will put us at the dynamic reactor. Not too much of a bigger movement, but still kind of like a pushing upwards here. So going for the short, if you're going to be shorting this one, make sure you are in half of a position, right? And then if you see breakthrough, well, then prepare for the next long in here if we are above the zero line right down here below. Let's finish up with OM. OM, we already have closed this the trading here. Guys, OM is just not moving. I bet you that now that we have closed, we're going to be seeing the movement. But it doesn't seem to be the movement that we are expecting. Let me throw in here my zero line. Let me click OK. And that is because we are kind of like a breaking through. If we finalize breaking through here, most likely we're going to go and grab this. There we go. The next loud order block all the way in here. And guess what? We do have an ongoing alert at 592. So be careful on this one. We could be shorting OM for a breakout retest. We do have a liquidity zone in here. So this could be a fast movement for a retracement. Basically making your window of opportunity of entry very short and quick. And I think that's what I got so far on altcoins. Let me pass it over to you, Piper, and see if you have anything else to add to it.
Yeah, I had a request. We had a request for a stock that just launched on IPO. Corweave. Let's go take a look at this and see how this looks. This is from Mike Play. Okay, so initial IPO launch, typical. This is your typical look on IPO launch here. Of course, nothing's going to work on it because we don't have enough history yet for anything. But let's go put it down on the hourly and take a look. Yeah, I would watch for this thing to come back in. If we pull a fixed range volume profile, it's IPO launch. So typically, guys, when the IPO launches, it spikes up. That everyone gets hopium for it. That, hey, I want to get in. This thing's going to pump, and most of the time they do not pump. They come right back down and hit a lane. I would watch here for about $39.61. This is going to be your point of control on here. You can see we are getting near the bottom on our oscillator. Money flow is still coming down though. True 7 has fired here on the hourly. I would start looking at dollar cost averaging into this at $39.87. If this was me, if I was buying this, that's what I would do. I don't know a whole lot about the company, but just on a quick snapshot look, just on the point of control where a majority of its buying pressure has been right there at that range. So that's what I got there. I appreciate that request. It's always nice to look at new charts. I'm watching for Circle. When Circle launches its IPO, it should be sometime this month, allegedly. I am looking to get into that. If you guys don't know what Circle is, it is the IPO. It is the company that does USDC. I think they're going to get a lot of support behind them on regulation and on institutional utilization of their blockchain for stablecoin money movement. So a lot of stablecoin plays being made in policy right now in the U.S. government. I think that Circle, being a U.S.-based company, is going to be a pretty good one there to get it. So that's what I'm seeing there. What an environment to launch in. Ouch. Yeah, but what an environment to buy a new IPO in, Crypto Billy. And so that's why I said I would start looking at dollar cost average. I wouldn't ape into it, but let's give it some time and start looking at that level there on Corweave. So, OC, what do you got for the people on the way out, man? Tell them what happens if they smash the like button, bro. It's Friday, and we're about to enjoy our weekend, spend time with the family and loved ones. My dog's coming back today. So if you're a member, Gypsy is an emoji. Drop Gypsy in the chat. My dog comes back from training today. She's been in service dog training, and she comes home for the weekend. So boot camp. What do they get if they smash that like? Tell them about their weekend, OC.
Absolutely, guys. So it's time to enjoy the weekend. Be safe out there. We're gonna have a lot of volatility, low volume throughout the weekend. So look for your big support areas, and also maybe a couple of shorts might be playing out this weekend. But first of all, thank you so much for joining the channel. And remember that the Piper Academy is the only channel where clicking the like button gives you power ups. So if you click the like button, you'll see that your favorite product was gonna get unterrified. Nice. So let's click it. Nice. Oh, tequila going back down 20%. Nice.
Cheap tequila, unless you live in America and you have to pay a tariff. Anyway, I'll just go to Mexico and drink my tequila down there with OC. All right, guys, we're out of here. There's no one to redirect to today. I want you guys to go and enjoy time with your family and your friends and your loved ones. And remember that the most important thing in life is not your portfolio or what's on your charts. It is the people to your left, right, and in your circle. You guys are important to me. I'll be around all weekend if you guys want to hit me up. But I'm also going to be hanging out with my dog, hanging out with my wife, hanging out with my kid, and maybe hanging out with some friends. So you guys have a great weekend. We will catch you all back here on Monday. Don't forget to tune in later on today. OC guy going to be doing Trade Live with OC. And then Monday morning, we're starting it all off again with BC Port Corp. Good Morning Crypto. We'll be back at 10 a.m. and starting the whole week off. Until then, trade safe. And as always, guys, use some risk management. Much love. Enjoy your Friday. Have a great weekend. Peace.
I don't know what they keep telling me. I don't know what they keep telling me. Ain't no school like Piper Academy. Ain't no school like Piper Academy. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling after wheels fall low. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the soul train red eye. On my Mexican spaghetti, yo. Crunch crypto with a deep dive to project dime. And if you like the visual powered by Tar Prime, then you were part of that alumni that's all spine. But if you have step, fall back to offline.
Boom shakalaka!
We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling after wheels fall low. Sound off
to get with them. The ZTS rhythm. Rip it. Alexandra.
Yeah, that's my alumni, you know what I mean?
That was awesome, dude.